All right, welcome back. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Obviously, do not invest in anything you're not willing to lose sleep over, and everything's extremely volatile and risky, especially right now with a lot of the economic data coming out and currently global geopolitical events, right? In today's video, I'm going to talk about World War III, which is, I think it's already started. It's mainly economic right now. And then we'll talk about all the economic data, which has come out in recent weeks, and it's looking very interesting, very bad. Currencies, we'll do timing the Fed pivot, because that's what the markets are really all about right now, which I'll talk about that. Energy crisis that is continuing. It's getting really bad in Europe and globally now. It also ties into what's happening with the East versus West. East versus West. And then the food crisis also ongoing. And I believe that was going to actually happen no matter what. And I'll talk more about that, charts, and then if we have enough time, I'll get to the news. All right, here's the S&P 500. Let's start off with just talking about recapping the last few weeks here. So for the past 9 weeks, the market has it was very volatile for the first 4 weeks, and then all of a sudden it shot up for 1, 2, 3, 4 week. For the past 4 weeks, the market's been green. All right, well, a couple reasons. First of all, it happened right after Powell raised rates. I believe it was a whole percentage point, whole percent. And then the market soon after started rallying, and there was some bad economic data coming out. So bad news turned bullish for the markets because everyone's anticipating a Fed pivot too soon, in my opinion. And of course, there was also short covering and short squeezes happening, right? Pretty much gamma squeezes. So, options were like over $1 trillion. Like everyone was short. Including myself. And I jumped too soon on the shorted again bandwagon. I shorted again around when it started going over 4,000. I was wrong for the past 2 weeks, and it sort of wrecked me a little bit. And it is what it is. You're never going to get every trade right. But it sucks when you over position yourself. So what I ended up doing was I put on more shorts last Thursday of last week. Today is Wednesday, and those have been working out because the market started selling off last Friday and this week, right? And that's right here, these two red candles. So the reason I put on my short was because this bullish rally was a little long in the tooth, and economic data is actually getting really bad. And then you have to start considering earning and profit margins just getting annihilated from a few things, right? I mean, one is supply chain issues. Another reason is, like I said, all these corporations' inventory is stockpiled to the ceiling because the past 2 years since COVID, because of the supply chain issues, they just bought and stocked up as much as inventory as they could. And now they're kind of stuck selling it because people stopped doing discretionary shopping because inflation took off and their utilities, mortgage rates, everything just, all loans, car loans, everything just going up, right? Because of the energy crisis and because the Fed started raising interest rates at the beginning of this year. And again, they're still late to raising interest rates because the economy was already slowing down in Q4 of last year. Of 2021, and it was doing that on its own with interest rates at 0. And they're too late to raising rates, and they're kind of dragging their feet with raising rates, first with 25 basis points, then 50, then 75, and the last one was a full percentage point, right? All right. And then there's a lagging effect of like 9 months after they start raising rates. So we haven't actually seen the effects of them raising rates. We're going to start seeing that in maybe probably the end of next month. And then it'll really hit hard in the winter. All right, so the market, because this generation on Wall Street's really young. A lot of them haven't even really experienced the mortgage-backed security crisis back in 2007, and that's when I started getting into trading stocks and whatnot. So a lot of the guys on Wall Street are even younger than me. They're like in their late 20s. So they have no idea what they're doing. But upper management does, right? So, and they're the ones who make the big calls for institutional investing, like macro rotating and whatnot. And anyways, earnings and profits for corporations are going to be wrecked from now on. And that is starting to get priced into the market. And so the market's starting to sell off just on that, because there's really absolutely no reason for it to go up besides money managers recovering their short positions, and the markets were falling all year. And it was basically a giant bull trap. Now, and the pivot, like I said, the Fed's not pivoting, not yet. But for midterms, may they just stop raising rates? I think that's the trick up their sleeve. So one more rate hike, maybe 50 basis points, and then right after that, like no rate hike for November. And then the market might rally. Here's the question though. Where will the market be when that happens? So we still have like 2 months till then. I think the market's going to sell off for a little bit, especially going into earnings and the next FOMC. Here's the thing. There's Jackson Hole, which is in like Wyoming. For some reason, they go there and they talk a lot about economics with a nice backdrop of like the mountains. And then they'll probably, I don't know what they're going to say, but they might, and that's this Thursday and Friday of this week. They're probably going to say that they have to fight inflation because it's not coming down. Especially, here's what's funny. The inflation's not coming down for a couple reasons. One is oil and energy. It's only rising because of the geopolitical stuff and because of, this admin's, stance on energy independence. They're basically listen, all the energy companies in the US, they're not going to reinvest into energy if this admin is anti-energy. So energy prices are only going to go up, and the SPR, the reserves, is just being depleted day by day. We're probably past 60%, maybe getting towards 70% depletion, and that's for an emergency, like, I don't know, a hot global geopolitical event. So I see more downside, also more economic data coming out, and it's going to be so bad, the market's going to sell off, and the Fed's still going to do probably another 50 basis point rate hike based on one thing, and that's jobs data. And I was listening to Schiff, and a lot of people are actually doing, the poors they're working 2 to 3 part-time jobs, and then the upper middle class are working 2 full-time jobs. But the only way and how can they do that? There's not enough time in the week, right? Well, and Schiff broke it down. I'm not going to break it down. Because you can work from home now, and if your resume is good, anyone will hire you right now. And you just basically have 2 full-time jobs sitting at home. But you're doing, half-ass on both jobs, just the bare minimum so that you don't get fired. And then you're getting 2 full-time pay. Which I don't blame him. I don't blame him. You got to do what you got to do. I mean, you're going to take advantage of it. And not just that. On top of that, people are asking for raises because of inflation, and companies are giving them because they can't find good help these days, right? So, yeah. So that's boosting jobs data. Also, it's probably motivated because of November. And because, elections. So that is the only, and here's the thing, they're going to revise these numbers probably as soon as we get past that event, right? So that's the backdrop that the Fed is raising rate. And they'll do probably one more. 50 basis point or something like that. It might be only a 25, I don't know. But that's probably the last one for this year, and then they're going to say, and then they're just not going to raise. And this one's coming up mid September, I believe. And then after mid September, they will start signaling or they just won't do another rate hike in October. All right. And then the market will rally. So then we'll see a moonshot. Like, this is it. They're pivoting, but then it's another, or it might not even go higher than the previous, but it might. I don't know. And that'll be for elections. And then it'll tank again because the economic data probably early 2023 will be just so bad and something's going to break. And then the real pivot will probably come around spring next year, if I had to guess right now currently. I could change my mind as things develop. But as of right now, that's where my timing is. Now, I was really wrong on my timing late last year, early this year, where I thought the Fed would just go super hawkish just to stop inflation, and then they would pivot around this time. Well, my timing's off. They're really dragging their feet. And I believe it's because of the Ruskies and their move in Europe. All right. That's my excuse. So, but I've in the private group, I'm dynamic. Like, I move with the market. Yes, my last call was way too early on shorting again. I did cover my shorts on this huge dip, but then I jumped back in too early, like 2.5 weeks too early. Well, now I quadrupled down on my volatility trade. By the way, no options and no leverage this time. And I quadrupled down. All right. So right now it's in a profit. All right. So that's what I'm thinking for now. And I believe now the economy is so bad. If we look at data, I mean, we're full blown. We've been in recession all year, but now it's like it's very obvious in these asset classes and with economic data coming out currently. Manufacturing PMI 51. Forecast was 52. It's 51. If we look at the chart, it's heading down. So it measures the activity level of purchasing managers in the manufacturing sector. New home sales. Look at this. I mean, this is really bad. It's beyond worse than expected. It's dropping quickly, but they're off by like 70,000 from what was forecasted. So forecast was new home sales were 575,000, and then actual was 511. We're starting to get into the territory of March 2020 and 2007 or 8 mortgage-backed security crisis. Let's go to Mac. This is where it's at right now. See? Okay, so we're not quite where it was in 2011. 2011 was the ultimate bottom, but we're getting there, right? And remember, the population is supposed to be, it is larger. Not a lot larger, but it's probably 5 to 8% larger than it was back in 2011, and we're heading down there right now. So the housing market bubble has popped. Essentially, there's always a delay with people. People are really reluctant to lower prices on their homes, but I was looking around and it's starting to fall. They're starting to do cuts across the board. New home sales is negative 12%. Previous print was negative 7. Let's take a look at how that's looking. It's looking bad. Let's do the max. It's all the way down here. It's looking real. It's back where 2007 and 8 was. So, and at the bottom you'll see, like, back in 2010, it spiked all the way down here. And we're probably going to see a huge spike probably this winter. If you're looking to buy, next year might be a good time. But I have a feeling it's going to, because it takes, there's probably like a 4 to 6 month lag. It might be summer of 2023. It might even run into 2024. But again, they're going to be doing stimulus. And again, the Fed is raising rates now, but they're still very generous on employment. They extended a bunch of relief, which is welfare for everyone. child tax credits, student loan. No one's been paying those. So millennials and younger are really keeping that inflation going because they don't pay attention. They keep spending. That's what's probably. I still see cars at restaurants, even though prices are way through the roof. I don't know how. I feel like I feel like Americans, the last thing they'll give up is restaurant, which is ironically like one of the biggest expenditures for them is the biggest waste of money. You're literally flushing it down the toilet. And you could eat much healthier by going to a grocery store or a local farm or something. And yes, you have to cook, but try eating only once and eating really healthy, real nutrition dense and base. You don't have to eat as much. Like I've been the new thing I'm doing is swallowing just raw egg. What's it called? Gunking. And it fills you right up. It's really healthy for you. You just feel good about it. It's cheap, but it has to be organic eggs. If it's not, you're just swallowing raw eggs with a bunch of hormones in them that are gonna give you moobs. All right. So what else? Cash carry. I guess he was talking earlier today or yesterday in this is the most dovish guy on the Fed board. Even he said we're gonna keep raising rates. And that's crazy. I posted on my Twitter. So I think they just realized that here's why. They have to lower rate at least to 4% before they do stimulus again because the economy is already in the gutter. So they're looking forward. They're looking ahead. This is part of their strategy. They need to get inflation down enough so they could do stimulus and QE, later down the road. Because if they don't get inflation down, then how are they going to save the economy later? Because that's the corner they're in. If they don't get inflation, and yes, the economy will get really, really bad. Even Jamie Dimon from JP Morgan came out and said, we're going to see a recession like we've never really seen before. And what he's talking about is a stagflationary depression, like a inflationary depression. So you're just going to see spikes for like 6 months of inflation. Then inflation's going to drop, massive unemployment, and it's going to be weird and brutal, and it's going to be bad. It's going to unfortunately be really bad for the middle class because a lot of the middle class has been doing refinancing on their homes and taking advantage of the low interest rates the Fed has set for past few years, and they've been refining, taking equity out of their homes, and some of them are seeing their bills go up, and then some of them probably have adjustable rate mortgages, and they've blown through, and that's where a lot of the savings has come as well. And also, banks aren't stupid. They're not lending anymore, so the velocity of money is historically down. So when the Fed does pivot and they do stimulus again, I mean, inflation could drop back down to 4% for like 6 months, 8 months, and all of a sudden, probably in 2024, late 2024, you're just going to see inflation just go through the roof. So we have that to look forward to. But hey, our energy, commodities, and cryptos, they're going to explode in the next 2 years. Right now, we're just in the bear, right? Now, we might have another month of bear, maybe 2. But dollar cost averaging in, I would start doing that on the next stock market correction dump. All right. Germany. Europe is just, I mean, if you think things are bad in the US, Europe is just, it's bad. Because Germany is the engine of Europe, and they solely rely on Russian energy. And Germany did this to themselves, mainly due to corruption and who knows, maybe a WEF program. And yeah, if you have a German car, maybe get it fixed now and get some parts, because you're probably not going to be able to get them later on, as unless Europe capitulates to Russia and kind of, because that's what's really happening. That's what they want. They're just going to starve Europe of everything until they capitulate, and it's either war or economic capitulation, where they say, all right, you guys could have Ukraine, and then just sell us your energy. U.S. is trying to supply LNG, which is natural gas and energy, to Europe. But I don't know, man. I mean, we kind of have our own energy problems in the U.S., right? Because we're not incentivizing drilling and energy independence and exploration and cutting the red tape on all these companies which produce energy in the U.S. Economic suicide, jobless claims. That has not come out. That is Thursday, tomorrow. So U.S. GDP Q2, is this a revision coming out? We already did Q2, and it was like negative. It was negative 0.9%. So forecast is negative 0.8%, and we'll see what the actual be. Oh, this is quarterly. Well, this will be important. It'll be bad, no matter how you look at it. That's for the U.S. But when I was talking about Germany, yeah, that's quarterly. You want to look at the year over year for the U.S. But, it's a revision. So Germany's year over year, Q2, is also tomorrow. I bet it's going to be really bad. So that could take down the global market. Besides the U.S., the second largest is City of London, right? And then after that would probably be like Hong Kong or China. Friday for the US, we have core PCE price index. We have what else? And then Powell speaks at Jackson Hole. And yeah. So I pretty much covered the economic data which came out this week. But I also, what was I looking at? We already looked at that. So let's carry on to the best months for the stock market. For stock market gains, just historically, I'm curious. They're actually in October and November, and then December. So I do believe we're gonna get a correction for a few weeks here, and then that we'll get the very last, not the very last, but we'll get a 50 basis point rate hike. Powell's gonna probably cancel the next rate hike for maybe what reasons. I'm guessing he might not. He might still raise 25 basis, but at that point he's still raising rates, but the raises are smaller. So this is signaling to the market that the hiking cycle is over, and just on that they're going to buy the dip, right? So then, yeah, maybe in October, November, and December we see a rally, but then inflation's going to keep rising, and then geopolitical events may still kick off or heat up, especially in the Pacific, right? And then I believe by the end of this year or midwinter in 2023, it's just economic data is going to be horrendous. And we're in like hardcore recession, stagflationary depression. And maybe the Fed will just stop, not just tightening, they're also letting their debt roll off their balance sheet, which is like $180 billion a month, and most of this is mortgages. So that's just more pressure on the housing market. So the U.S. housing market, it's kind of like a replay of 2008, except we also have a bubble and everything else. So used car prices going to come down, new car prices, everything's just going to probably come down, and then they will probably be somewhat successful in winter with inflation coming down. But it's going to come at a crazy cost of people are going to start getting laid off, and the economy is really going to grind to a halt. So Q2 growth figures will make or break a recession. This is old because we're going to be waiting for Q3. We'll talk about agriculture and food in a little bit, but here's what I want to talk about. Corporate layoff, and they're really starting now. Ford laid off 8,000, Peloton, that's expected, Carvana 2,500, and these are just the big corporations, big companies. The data, nobody ever looks at the data with small businesses and somewhat mid-sized businesses. They're probably starting the layoffs now. But right now, the stocks and the companies which had the highest bubbly valuations on the stock market, they're starting to lay off. I mean, even Tesla laying off. Where's Tesla? I don't see it. I just saw it. Oh, here it is. 200. Netflix 300. JP Morgan 500. And these are high paid, like white collar jobs. Robinhood, of course, all the Reddit, Wall Street bet traders wrecked. These are just the first of the casualties. More are coming, and they're comparing it with rising interest rates have been a major factor because it does. So the cost of capital, so the cost of doing business is rising, not just with inflation, but it's rising with wage increases and rates, because debt costs more to finance, maybe corporate buybacks or for expansion or anything really. And their current and most companies are just swimming in debt. It's not just the retail average person, Joe Sixpack. Companies are swimming in debt, and to finance that, they have to pay more now with rates rising. So it's cutting into their profit margins. And what do? You gotta, so you either raise people's, well, no, you either do wage cuts, which nobody ever does because your employees are going to get mad and they'll work, they won't be motivated to work as hard. And now you just have disgruntled employees. So it's just better to lay off a few and keep the rest and not give them wage cuts, right? Or that's how I see it. That's how I would run it. I think that. So this is a big deal. So let's talk about major macro stuff for a second. So look at this map. Pipelines and refineries. I do believe in the long term, in this decade, if you're looking for a real job, like a real man's job, you probably want to be where all these refineries, mining companies, and commodity companies are based. And you want to be like in that town locally, and you want to try to get a job there because you'll have somewhat more job security than all these people working in cubicles shuffling. They're not even shuffling paper anymore. They're just sticking around on spreadsheets. Energy transition, visualizing that. So renewables are growing, but that's malinvestment, and that's from all the funny money printing we've been doing, and like regulatory and government, I'd say overreach, but they're guiding that with carbon credits, which that market, everyone thought that was going to be like the big money making market because all the insiders and all the elites are in it, and they're incentivizing that, which is really kind of like taking over capitalist corporations. But that's already tanked, so that's not going to work out. Like I said, a snake eats itself. They destroy their own infrastructures and scams and with the green movement and climate change. Yes, we're going into a solar minimum, which is a cooling cycle. You look at the historic data, it's not actually warming. But you know what's funny? And this will tie into what I'm going to talk about after this. Agriculture and wheat, and why food is going to become way more expensive, and why they want you to eat Z-bugs. You want the world to be warming up so you could grow more crops and more wheat and agriculture to feed everyone, right? But the world is actually cooling now. So it's just everything is ass backwards. We're living in the upside down, which is, you could look at it a biblical or whatever way, but it is what it is. All right, so nuclear is going to grow. I'm definitely invested in nuclear. Oil, it's going to tick back up, but it's going to take years, but oil's not going anywhere. Listen, the East, they don't give a shit. They don't give a shit about this energy. And once the West starts really collapsing and people are going to, do what they do, the people in charge now are going to be replaced. And we're going to go back to, Germany already went back to coal, like the 1800s, because they had to. It's either that or, everything runs on energy. Like, people will revolt. Like, people aren't going to just starve for the good of the, Greta Thunberg, right? So, yeah, this is all going to tick back up. But it's probably going to take real calamity and economic pains, and it's going to be real sharp real quick this winter, especially for Europe. Producers of natural gas? The US is actually top dog in that because of shale, but the thing with shale is, since the early 2000s, I feel like we've hit peak shale, and I don't want to go into why, but it's so energy intensive and crazy to drill for shale. And I've got a friend who just bought like a home and land, and he sold some rights underneath on his land for natural gas drilling, and it's super profitable, but it's kind of like a quick, it's not like oil where it just keeps coming out for years and decades. When they drill for shale, it's like releasing gas and pressure underneath the ground and then just pumping it full of water real quick, and they deplete those wells within like weeks and months, and then it's done. It's dry. and then they have to move on to the next one. So the price of natural gas is probably only going to go up in the long run. That's what my guess is. All right, not financial advice. Funny thing, look at China and where's India? Some of the bigger economies in the world, or the biggest ones, they do not produce a lot of natural gas. They all depend pretty much on Russia because of the new BRICS alliance, right? Which is the new form of globalization that they want, which is what's really going on right now. Eastern Europe and South China Sea and down the Pacific. It's all wars are for resources and economic superiority over your main competitor. What is oil production by country in 2021? So really, look at this. The U.S. is bigger than the Saudi. Interesting. And Russia is about the size of the Saudis. I find this very interesting. Look how low. So China does not create a lot of oil, but it's a decent amount, but not for the size of their population in an industrialized economy, right? But they do have reserves to last them for years. Because I watched a whole documentary on it. They've been stockpiling it. And here's the theory going around from McAfee research, his YouTube. Russia could literally sell cheap oil to China and India and everyone else, and they're buying that cheap oil right now, and they need it, instead of selling it to Europe, right, and even giving it to the U.S., and they could just halt production entirely to their non-ally, right, which is like Europe, U.S., and some other country. And they'll be fine because the price of oil will double globally, and they will still make a profit. Because the oil still, in weird supply chain ways, does still make its way back to U.S. and everywhere else. But they could just do that and starve the West of energy. Now, the capacity of the U.S. is enormous. I mean, the U.S. could supply Europe entirely and make a profit on it, and we could have cheap oil in the U.S., but the current admin doesn't want to do that because they're all about tree hugging. It's just wild. So the BRICS could hold the world kind of at hostage economically, which is what I was talking about when I started the video, with their energy output superiority and dominance. And then not just that, supply chains, as in like China shipping goods that like let's say the US and other countries cannot produce themselves and manufacture themselves anymore because we've financialized our economies pretty much, right? All right. Who's still buying fossil fuels from Russia? Well, it's mainly China and Germany. So they still are. And natural gas. I mean, they haven't really, but recently this past week, there's always these maintenance issues, in quotations, maintenance. I think these are like warnings, like you guys need to back off, because Germany, like all these countries, keep setting money and supplies train. Who else? Turkey does. They buy a lot, like a lot. That's a lot for that country. Italy does as well. Yeah, so does Poland and France. I mean, they're still buying. India is actually below France and Poland. Even Japan buys. Egypt buys a lot. So you can see where it's heavily in pink or red, but actually red, and then the pink behind it is the less they're buying from prior, right? So they haven't reduced it that much, and it's causing that much economic turmoil. All right, I just want to look at these. These are just interesting. The state of the world's debt. Japan is really bad, and then Greece. Outside of that is like the pigs nations, Spain, Portugal for Europe, Belgium, France, and then further out we go. Where's US? It doesn't. Let's talk about real estate again. So here's America's household income distribution as 100 homes. I'll look at the rest of the world in a second. This is very interesting. U.S. medium household income. This is the middle class, this purple. Look at that. Look how small it is. It used to be like probably all the way over here. It used to just be this huge chunk. But their household medium income is $67,000, and the bottom half is much larger than the middle class now. Now there is like this little sweet spot of like upper middle class, but not quite like doing really well. Like not the McMansions, but you know they're doing fairly well. Theirs is it not here? So it's up around the 150,000, and then 200,000. The yellow here. Actually, what I was just talking about, that's the red. They're like high middle class, but not quite in the giant McMansion. The giant McMansions start around the orange and the light. Households that live on less than 50,000 per year. Yeah, this is what I was trying to show you. Look at that. It's about 30 to 33% of the entire population. Households that earn more than 150,000 per year. Look how small that is. So technically the middle class, I mean, you could, so these people are on their way out of the middle class, this dark violet, and then the red and the orange is going to turn into middle class. And then the yellow and the real light, like peach color here, is just gonna break away, and then eventually you'll only have super rich poor, essentially. All right, salary needed to buy a home. I just thought this was very interesting. In San Diego, it's 160,000. Los Angeles, 150,000. Sacramento, 100,000. What kind of home though? I think maybe just an average home. That's pretty wild. San Francisco's 250,000. San Jose, 330,000. Miami, everyone went to Florida. See, everyone went to Florida, Texas, right? Look how much your income has to go up with your economy expanding, because there's not enough homes and people keep buying them and keep buying assets. A lot of inflation does come. All right, U.S. consumer debt approaches 16 trillion. That's a lot. That's about, I would say the real economy is about 15 trillion, because right now it's probably higher because of after COVID and whatever the 9 trillion they printed out of thin air, which skews all kinds of stuff. But I bet the real economy is smaller than what they say, and I don't know what it is right now. I think it's like trillion. It's probably really only like 15, 14. So what I'm trying to say is the consumer debt is about the same size as the annual GDP, or the annual economy, which is really bad when they raise interest rates and then start seeing layoffs and everything, just to stop inflation and kind of push it back down temporarily, right? For the next reinflation of the economy. Where will the world's next 1,000 babies be born? This is really important. Economies grow when families grow, right? The more people, the more productivity and output. And that's another reason why they pretty much let migration happen. The people who don't care about their own nation's culture, but you could blame the society as well. I mean, if you don't want to mow your own lawn, you don't want to clean your own house, and you're not willing to work, or then they'll let people in from other places around the world come in to do that because you need it. And so far, I mean, we have automation, but not like to that scale. We still need real people. And not just that, I mean, silicone chips and all this stuff is, again, the supply chain with geo tensions, and I don't think we're going to see robots. We might actually go backwards towards horse and buggy and coal, like Europe currently. We're not going to get EVs, guys. You're going to go back to just walking and bicycles and horse and buggy. Because it's so energy intensive, and, your EROI, energy return on investment, to create these giant lithium batteries it takes a lot of oil to do that. So we're actually might go backwards. And that's what happens actually when economies and empires come to their end. But the West is not growing. It's their populations are actually declining, and there's a huge slowdown in South America, right? Even mid, and then the only place it's actually gonna decline in China in, like, I don't know, 10 to 20 years from now. And the only ones who are gonna be expanding will be India and Africa and like Pakistan. So why is this important? Well, one, for economic growth, you do need more people. And I know a lot of what you guys are thinking. Well, a lot of people took some experimental stuff lately. Yeah, that's probably going to put a dent in it. But I don't think we would have seen more by now. So, maybe only like 5% or a small percentage of people are really going to get affected by it, which is horrible, and, might shorten it. but I think a lot of people are still going to be around. Actually, I think populations are going to drop because of malnutrition, and that's in maybe World War. But so this brings me into why they want us eating bugs, which is the left, right? And that is because, truth be told, in the past couple decades, well, these emerging markets, the third and second world, really China, right? And it's not just China, it's like Philippines, Indonesia, like all these emerging economies, even in Africa and South America, their diet was mainly comprised of like rice and beans and wheat. It wasn't meat. But as their economies grew in the past 2 decades, especially China exploded, right? They went from farmers to like ghost cities and giant metropolises, like 10 times greater than like anything you see in the US. So 1.4 billion people here. And if we look at here, I'm going to play. Let's look at a population density. I want to see a 3D one. I hope this is the site. Come on, please be site or not the site that this is good enough. So I like the 3 dimension. Can I make this 3D? Anyways, you guys get the point though. I used to show this during the COVID stuff. So these people, they're eating a lot more meat. Well, guess where guess where meat comes from? Cows and goats and chickens and all that, right? Where it comes from is these animals eat wheat. They eat hay and straw. And what do you need for that? You need fertilizer. And what do we have right now? Like a huge problem with 3 reasons for the fertilizer and food shortage. One is top exporters of fertilizer. Crops across the world are dependent on fertilizer. What's the excuse? Well, 2 is top grain exporters. Well, Russia is the top fertilizer exporter, right? And so is China. And if we're going into like the age of empires clashing for energy and resources and land, well, the West is going to get a lot less. Europe, U.S. Where does the U.S. create any fertilizer? It creates a little bit, but not a lot. I mean, I feel like we could probably create a lot more if we wanted, if money was invested. I believe Canada does create a decent amount, but for some reason they're hoarding it. So countries are starting to hoard their own goods, which is the breakdown of globalization. And all of our food, all the food people see in the stores, a lot of it actually comes from all around the world. And it's like grown in weird places. And even if it's grown like domestically, are not maybe nearby on the same continent, but the fertilizer to grow it still comes from halfway around the world, right? From like these places, Russia and China. So they probably send their fertilizer down to South America. They grow all the food there and then send it to the U.S., right? But the U.S. has tons of farmland, tons of grain, tons of wheat, but assholes are buying it up so they could build bug farms on them. And you know who I'm talking about. Some certain software developer. It's wild. None of them are going to be successful in their plans. They've already failed. But they're still going along with it because they don't know they did it because they live in echo. But it doesn't mean that we're not going to go through tough times. It's not going to be the end of the world. We're just going to go through some real tough times. And they might not last too long. Maybe just a couple years. It gets real bad for 2, maybe 5 years, and then we'll come out of it. So 2 is top grain exporters. The U.S. is a top grain exporter. That's really good for us here. But they keep telling us we're going to be eating bugs, man. And it's really annoying. 3 recent food shortages. There you go. I don't think it's going to be like Mad Max. I think there'll be food. It's just going to keep getting more expensive. And then you're going to see shortages of this and that there, here and there. And you already see it when you go to the stores now. It's just there's a lot of mouths globally as a whole. And that's why we're going to see these countries hoard. And then because of globalization, that's why you're going to see shortages of certain things at certain times. That's what I'm trying to say. But overall, prices going up. And that's part of the inflation problem. So this global production of wheat. Hold on. Okay, so grains, the U.S. is top, but wheat is actually, I mean, U.S. is big. It's one of the top 5, but combined Russia and China and India are the top. And, I don't know where India really lies because they really need cheap energy. And again, the Silk Road does go right through them. And economically, it just makes sense for India to be a part of this economic, BRICS new globalization or order. Right. And then here's the West. So here's the East. Here's the West. Obviously, the East has most of the wheat. And the wheat is bread, spaghetti, rice, and that's what you need for agriculture. Although the U.S. is very wheat rich, is actually for the cows. Listen, I'm no farmer. I'm just trying to, I'm just rambling on here. Real estate bubble. All the major cities, but they're huge down under for the Aussie. Just enormous. So Australia during 2007, 8, 9, they never experienced they weren't like they were like isolated from the mortgage-backed security crisis, which was global back then. China was isolated as well. They didn't really feel it. They just kept expanding there. But this time around, they're all going to get hit. Everyone's going to get hit, especially, everyone's. So you can look at this map. I believe it's pretty bad in Canada. And a lot of it in Canada, in Europe, I believe, and in Australia and everywhere, it's actually money like escaping from China and their huge economic boom in the past 2 decades because they're buying up land everywhere else. And that's how they're getting money out, because a lot of them do see and don't maybe want to be there, and they do see what's happening there. And it's pretty obvious when you have ghost cities that you're in the biggest commercial and residential real estate bubble in human history. Pretty obvious. And they're built like shit. That's why they are actually bulldozing them, blowing them up and down. So this was just interesting. U.S. inflation. Which categories have been hit the hardest? Consumer Price Index CPI month. Oh, this is a nice visual. The monthly change. So June was huge. July came down a little bit. It dipped and then just shot up. It's shooting up for this was 2021. It's not even this year. So this was from 9 months ago. Still, in 2021, inflation was already going up. So probably double these numbers. So beef was plus 24%. Probably gone up double the price, and it has, I've noticed. It used to, I buy this organic meat, it's like a square puck or what, not a puck, just like a square. It's like a pound. And it used to be 2 years ago, it'd be $4 or $5. Now it's straight up $8, $9. So it's double all of this. All right, what else do I have? Let's end this with charts. I'll brush over. I'm already over an hour, but I haven't made a video in a while, so I'll go long for you guys who want it. Here's Bitcoin. I do believe it still needs to retest my blue line. That's around 16,000. Can it fall to Richard's target? Maybe 11,000. Yeah, it could wick down there easily, especially if Mt. Gox coins are released, and some will be. Why not? And they're going to be released pretty much around the time where the stock market's probably going to take another dump, which has probably already started since last Friday, right? Hex on the weekly, it's on a 5 count, but the 3 count traded much higher than the previous 1 and 2 of a 9 count to the upside. 1, 2, I don't know. The weekly is, Here's the thing. Timing Hex is different because we don't know when this damn thing's going to launch. I actually do have a good idea when it might. I just have a speculative guess, but I'm going to keep that to myself. Can it dump again? Yeah. But think about it though. If it does, it's not gonna be down there, right? So there's a high probability the bottom's in. Can it dump back down to 2 cents, or let's say 3.5 cents? Sure, you go right back down there. How long will it stay there? A day or two at the most, and then it'll bounce right back up. So if you're looking to try to catch the bottom, nobody ever does, because buy market orders or buy limit orders are hit in the order books who set limit orders, and it just wicks up, right? So it just might dump again and just make a higher low. Even at 0.033 cents, I would start dollar cost averaging in. And maybe you get lucky and maybe it will just wick all the way to a penny. But it's not going to be down there for long, like at the most like a day or two. But more likely it'll just be down there for a couple hours and then it'll just wick right up. And because some whale price set a buy limit order, you could look at the order books, it's all transparent. And then, so if anything, you could set buy orders. Do they always fill? No. So, you could just dollar cost average and look at the chart as it falls and just know once this. So if the markets dump in the next few weeks or to a month, and so does Bitcoin, just dollar cost average into Hex, and then we're ready to go for the next bull market. I'll make a whole separate video. There's no reason to despair. This is what just happens. Bitcoin had I don't know, guys, 13 or something, or 12, or I don't know, 90, 80, 70%. All right. My the dollar, talk about the dollar real quick. The milkshake theory is definitely playing out. So on the next this correction I'm expecting now and soonish, it could shoot the dollar to new recent local all-time highs, and we could see easily 115 handle. We could start seeing 120, maybe even higher, 128, shoot all the way up there. And mainly it'll be because Japan's screwed, so is Europe, and the dollar's the cleanest shirt, right, in the hamper of dirty shirts. So that's the milkshake theory. It's kind of playing out. Besides the fact dollar denominated debt is defaulting globally by emerging markets, causing the milkshake theory and the sucking of currencies and capital into the dollar. Does that mean inflation is going to come down? I mean, it does help it because of a trade. And listen, we're going to see huge discounts on cars, all sorts of assets, homes, even goods. You're going to see big discounts coming up, I believe, this winter. And even possibly going into the holiday season. We'll see. But the dollar milkshake theory is going to help that. So, but first, let's see a correction in the stock market because of horrible economic data and earnings. And one more rate hike, maybe. Now, by the way, if they stop raising rates in October, November, right? That doesn't mean that the Fed won't do another rate hike, maybe February of 2023. But I feel like by then the economic data will be just so bad. They won't be raising rates, but they also won't be cutting. And they maybe will be letting their debt on their balance sheet roll off, which is quantitative tightening, because that's in effect. It started in July. So they'll just do kind of nothing maybe. And then the economy will get so bad that the recession will bring inflation down on its own. And I believe that's what they're planning. Unless they might just keep doing 25 basis point rate hikes until seriously something breaks, like in the financial, which is right here. Here's the financial. This is a weekly chart. Every candlestick's a week. Listen, I believe if financials go back down, not quite to lows of 2020, but if they just get around that 400 to 430 range, that's when the banks and something's gonna go tits up. That's where I think things are going to get real. Something will break, and that's when the real pivot's going to come. And we've got quite a ways to go to get 25% drop in financials. And yeah, sure, it could happen quickly, right? There could also be a black swan event, or something happens in the Pacific. It could happen quickly. It could happen in 2 months, maybe even a month, right? So I would watch the financials as the canary in the coal mine, and I haven't seen anyone else say that really. And I listen to a lot of. Here's the FANG index. Where's my? Well, I have support. I do believe the FNG, the NYSE FANG index futures, it's gonna revisit 3,600 during this correction that probably just started and will possibly continue for another or a little bit, maybe 6 most. But then again, midterm. Here's U.S. natural gas. Another reason why I believe the markets and equities needs to sell off is that's another way to get inflation down. They're still way overvalued, and we just had that huge bull trap rally and bear market rally, right? Relief rally. And it will help bring down commodities and energy. Energy is the big one that needs to come down. So that'll help bring natural gas down a little bit. Not a lot because of what's going on in Eastern Europe, right? But it'll definitely help with oil. WTI is still, it's around 94 right now. It's come down from its 130 high. Now look at this. Back in the good old, when I started driving, back around here, it was $17 a barrel. Like, I was paying less than $1 for a gallon when I first started driving, 15, 16. And look where it's at now. Wild. But right before the mortgage-backed security crisis and all that happened, a barrel of oil, WTI, did go to 146, and gas at that time went to $4 a gallon. Everyone was freaking out. Again, it only went to 130, and we're seeing like $5 a gallon. Again, I do believe during the next correction, and because of the recession in winter, I mean, we just saw a spike up. Maybe, like, I'm really hoping a little more downside to around $77, $80. I've been talking about that target. And then because of the equities and overall market falling, oil may drop down there real quickly and then bounce back up. But it's not certain, right? Because I don't know, escalation in Eastern Europe or something popping off in the Pacific could send WTI like straight back up. And by the way, OPEC not being very friendly with the West anymore. Looks like they're jumping ship. They're switching sides. They're with the BRICS now, economic East superpowers, right? And the current admin is doing absolutely nothing to help oil prices besides depleting the emergency supply, right? So, but in order to get inflation down, I mean, oil has to come back. And the best I see happening is hitting my blue line again, but it'll probably be around $70. And it's not going to stay down there for long, and it's going to shoot back up. And long term, we're going to see all-time highs long term, and I'm talking like, who knows, some people are like $300 a barrel. Nah, I mean maybe 200, and that'll unfold. It'll probably take some time, a few years. At that point, yeah, and I mean the national average would be around $7, $8, $9, and at that point it's like it's starting to be very Mad Maxy. And that my daily driver, I'm looking. There's going to be some discounts on used vehicles and new ones coming up in the next like 6 to 9 months, and I'm looking at as a car that you just drive around most of the time, daily driver, something really really good on gas, and not an EV. I'm talking like petrol based. Oh, I did want to show. I'll talk about this. Maybe I'll make one day a video about it. But listen, the future is not EV. I'll talk about it. Anyways, I don't want to make this too long. And you guys, if you've hung in there this long, good for you. And I appreciate it. Thank you for listening to me ramble on here. You guys can make the video go faster. Just click on the YouTube in the bottom right hand corner, I believe, in settings or whatever, and you can make it go 1.5 times speed, right? Let's look at the news real quick, brush over it. Yeah, I think I think this cult's done. They're dunsies. When people are starving and struggling, they don't give a shit about the plant, about Mother Earth. Not that they're really helping anything anyway. They're actually anti. Think about it this way. I mean, with global economies imploding, do you think that's green? No. You need innovation to make it. The CBDC's coming out. Also, BlackRock getting into crypto. How wonderful. I mean, they'll pump our bags, but it's like we're selling our souls. Weary Europeans must bear consequences of Ukraine. Putin will eventually blink. Nah, I don't know about that. They're not doing bad there. They're fine, like economic for Russia. Crime is soaring everywhere. Everywhere. It's out of control in major cities. I warned you guys about this. Still, migrants going into Europe. Eventually, they're going to be trying to flee. It might get that bad with the energy crisis. Or maybe we'll just keep going. I don't know. Because I feel like they're getting paid. Well, all they have to do is take away the handouts, right? Use washcloths in Europe. Yeah, major droughts in southwest of U.S. And then apparently Europe's really hot. Guys, I don't think it's anything normal. Sure, it's hotter. It's a hot summer. It's better than a real cold winter. Yeah, they're cutting prices in the Hamptons because their stocks aren't up this year. U.S. Strategic Petroleum Reserve falls to 35-year low. I want to see where it's at. This is what I want to look. I'll read it real quick. United States Strategic Petroleum Reserve now has only 453 million barrels in its inventory following another significant drop in the past week that puts the emergency reserve at a low not seen in 3.5 decades. What was going on the last time? Was it like, probably Vietnam? In the week ending August 19th, the SPR saw another draw of 8 million. In March, the Biden admin authorized the release of 1 million barrels per day from the SPR. The record high release of crude oil from the SPR will end this fall. I don't know. He might just deplete it. In addition to the lowest inventory level, he won't, because that's their plan. They'll just keep doing it until winter. During winter, economy will be really, really bad, and demand for gas might go down as the economy slows nearly to a halt from recession. The record high release of crude oil. So let's take a look. So here, 1985. It's this red line, wild. And there's a hell of a lot more people now, right? And the economy's hell of a lot bigger than back in 1980. So technically, it's like this red line's really down, like around World War II level. If you think about it, if you adjust it for the size of the population and the size of the economy and reliance on it with everything, right? All goods, traveling through semis, which is not efficient whatsoever. We should be using rails a lot more, and Buffett is profiteering off of that big time right now. That's another reason why the Keystone was canceled, so Buffett could transport it on his trains. And because of this maritime laws BS, because of a few rich, fat lobbyist groups, all these resources or energy and everything, products, can be shipped from one state to another in the U.S. We have a huge coastal line, but it's not, because of this one regulation where like everything has to go to like one port or two ports, and then it has to be transferred with semis, which are always on the highways, dangerous, and causing traffic. I don't want to go down it, but shift talk. All right, guys, that's it. Smash some likes. Please share my videos. I really appreciate it. It's the only way my channel grows, and I'll keep making these videos. I've been making a lot less videos. I've been really busy. There's a lot going on in the private group. Now's the time to really position yourself for the, and I say this a lot, and I was kind of wrong in the past year. I did not think that the Fed would drag their feet this slow, but listen, I think I think right now we got to set ourselves up in crypto, and I have to update on some of these energy stocks. That's what I'm really bullish on. And uranium and a lot of things. And you'll learn a lot, and I believe I keep you guys really up to date and current with everything in the private group. Join. Links below the video. Until next time.